Welcome to Traders of the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. Thank you guys for joining us as always. We are always humbled by the support we get. So CPI came in light. Stock market seems pretty buoyant. It was literally the end of the world in mid-April. Everybody, I'd walk around the bar that I own, Brant's Palatine, and people who are conservatives would always be like, "What's this guy doing? Is he crazy? Is he crazy?" This was in mid-April. Okay, now is it only the stock market that affects people's psyche like this? But by the way, so we're back above the 200-day in the stocks. Are you a bull in the stocks? Are you a bull in the economy? What's your deal right now, Bob?
I'm a bull in stocks right now. I'm a minor bull in the economy. I do think that this slowdown that started is likely to continue a little bit. I think it's up in the air whether we actually fall into a technical recession or not. And I don't think I care, really. I mean, it is sort of a thing where people get fear develops about different phrases. You mentioned, is it just the stock market? The amount of people that came up to me and said, I don't know, man, these tariffs with inflation. These are people like, no offense to them. They do other things for a living. They're friends and they're successful people. I've never heard the word tariff come out of their mouth ever. And it was like, what do you mean? Like, why do you think tariffs are going to cause inflation? Well, that's what they're all saying. So, there gets to be this mood. And by the way, I'm not saying they are or they're not. I'm saying I've been doing this over 30 years, and I'm saying I don't think we know definitively if it's going to cause inflation. So I think that's what it was. And when people see the stock market going up like this, I'll bet you your average guy doesn't think inflation is going to be caused by tariffs anymore.
No question, because the psychology, and by the way, there's data that backs this up, particularly when a new president comes in. The stock market is what translates into the psychology of what people think, how things are going, good or bad. And it's amazing to me because it makes no sense. Sometimes markets just are overvalued and they have to come off a little bit. I do think that a lot of crazies were selling their stocks thinking that he was going to, do some great harm. I don't think he wants to go. Anyway, let's get to our guest. We have, again, I've said this a million times. Bobby and I are full of shit, maybe, but you cannot deny that being 25 years in mainstream media opens the door to get some great guests. And we have another one. Let's bring in Adam Koch I want to find out about that name too. Koch, K-O-O-S, Koch of Libertas, the president of. Let's bring him in. Okay, is it a Norseman sort of name? It sounds Danish or something, maybe, or no?
My dad is from Hungary.
Really?
Look at that.
Yeah.
It's interesting.
Hungary.
And
Hungary.
What now? This is gonna. I know the answer is gonna be Hungarian, but I'm just making sure. What language do they speak in Hungary? Is it Hungarian?
Hungarian. Yeah.
Yeah. And there used to be a buddy of mine owned a Hungarian restaurant. Ooh. I think I was the only person who liked it around here. He's like, no, there's a huge community, but it went belly up. But I thought it was pretty good. Right?
That's awful. Yeah. If you know what to eat, and Hungarian food is amazing.
Yeah, I thought the restaurant was great. Now, where are you coming to us from right now?
Columbus, Ohio, Buckeye Country.
Really? You're not in the echo chambers of the coasts. I'm so thankful of that. Who's your team? The Browns?
I grew up in Cleveland, so I'm a very sad, lifetime fan and season ticket holder of the Cleveland Browns. Yes.
Okay. Well, I hope that sadness continues. Because no, I'm just kidding.
Fan?
Right. We're Bears fans. I assume, Bobby, you're a Bears fan too. We're all
absolutely.
The only thing Chicago has in common, the only thing we ever agree on is Italian beef and the Bears. That's it. We fight each other tooth and nail for everything else. You heard the question I asked Bobby before. Okay, mid-April, everything sucked. This crazy orange man was driving us into the ground. I took a survey on Twitter, about 300 different money managers who all told the same tale. And that was they were getting calls from people to sell everything because of Donald Trump. Now, it's one thing if you do the analysis and you look at 10 different policy measures and say, well, I don't think the stock market's going to do well because of this. That's one thing. But if you're just an emotional wreck, pulling your hair out saying, sell, then you are the problem. What are your thoughts on any of that?
I mean, we heard a lot of it. It's unfortunate, and I think that the longer you know the markets and you play in the markets, and I think the harder it gets to watch other people fall victim to this kind of these biases and the emotions. It's tough. I mean, I'm not going to call anybody out because I don't want them to hear this and know who they are. But there's people who called us and they wanted to go to cash. And then of course they're like, well, what do you think we should do? And I'm like, well, I think you should keep doing what we're doing here, which, we run. And what I love about your show is, we run at our office, half of our models are technical and half are strategic. So we do the strategic stuff that everybody does in the whole country. Right. But the stuff that's really interesting is the tactical stuff. So, in, late February, early March, we start getting out of the market in our tactical models, and it's very robotic. There's no emotion behind it. And at one point, our aggressive tactical models were as much as 83% cash. And now it's 30% cash. And I wouldn't be surprised. I was just talking to Dave Keller. I don't know if you know Keller. It used to be stockcharts.com, Sierra Alpha Research. I was just on the phone with him earlier. And we were both talking about how, like, next week, wouldn't be surprised to see that models go full long. But you let the market tell you to do what to do. You don't look at the news.
That's a really great way to put it. You're in wealth management. I got a question for all the wealth managers that we know. Is it difficult to try to sort of intellectually shake these people who've been successful in their other lives? I mean, I find that people that have built wealth, especially those that are self-made, they get very embarrassed when they don't know everything. I mean, I've actually talked to guys in our business, mine and Jim's business specifically, active traders, guys from the trading floor, made all kinds of money. And now they're telling me the difference in the chemical makeup of different foods. And I'm like, you don't know that, just so you know, and neither do I. So
you're talking about me here, aren't you?
So do you find that challenging, like, to get these people who've been very successful and go, look, let me sit you down, and I need to explain to you that I know what I'm doing, just like in making shoes or widgets or whatever else you do?
I think it's I think it's I don't want to stereotype, but I'm going to anyway. I think it's certain career fields. I think we see a lot of that in the engineers. But I think it's because they're wired to look for everything that's wrong with everything and kind of pick it apart, because, some of them, if they make mistakes, people die. So I think they're wired that way. I think we see it a lot with doctors because they are such intelligent human beings. I think a lot of the time doctors kind of feel like, well, I'm really, really good at this, I should be good at everything. And architects sometimes are that way, but a lot of times business owners or your, average, call it working professional, executive, we don't see a lot of that with them. What we see a lot of within the subset of, call it your retail client, non-business owner, non-engineer, non-architect, non-doctor, would be just watching too much political news. In fact, I think any political news is too much political news, but I digress.
So am I understanding you right? And again, I don't want to get you in a trick bag with any of your clients. The college educated are worse than the self-made. I mean, and that's not mutually exclusive. You can be college educated.
I think you could probably do some research and find some correlation there. I bet. Yeah.
I love that so much.
That's
Jimmy?
so funny. So Bobby and I were talking, and this is going to be a question to both of you as well. I thought 2025 was going to be a tumultuous year. So far, I've been right. I'm reluctant to call a green light in this stock market rally. I like the fact that it closed above the 200-day. Bobby's tutelage, I like to see a runaway strength, but now Bobby's convinced me that what you really want to see is it back up to that 200-day, find support, and then rally. But my question to you is that, do you think we're challenging the new highs now? Do you think we're out of the woods? What are your broad thoughts?
I think I don't like to. I always say I'm a trend follower, not a trend predictor.
Right.
But I think a lot of things, I guess. I think that the fact that we're above the 200, I like to use the 40-week personally, just, even though mathematically for those watching and listening, it's the same thing.
Right.
It just using the 40-week moving average and close at the 40-week on a Friday and then waiting for the European close on Mondays at 11 when a lot of the volume leaves the market is a little bit of a slower way of doing it and avoid some whipsaws. So that's why I use the 40-week. But I think that this was an emotionally charged sell-off. And news driven. And I think that's why we're not going to see the lows again. Now, the market doesn't care what I think. I would not be surprised to see stocks on the S&P break south of the 200-day, which sits right around 57.50 right now.
Right.
And then fall back to the March lows at right around 5,500. And for that to shake some people out below the 200. And then to see it to head northward from there, basically to see another major higher low.
Yeah. No, see, I actually love that because I
Love
believe
that.
it too. Because this just
Yeah.
seems too easy to me. Bobby, you're completely on board with that too. And if you are on board with that, where do you think that leaves the Mag 7 tech in general?
So I am on board with that, and I'm gonna leave. Jimmy's heard this a million times, Adam. I haven't had a chance to tell you this before. We had a death cross in the S&P, in basically all the major indices. The Russell took place first. Now, before I finish this statement, to anyone who hasn't watched this before, death cross is an absolutely piece of crap indicator for lower lows. They don't work, right? As a matter of fact, we did research on them, and they used to work. They haven't worked in the last 20 years in any reliable way. There's no way you could like label those as signal to go to cash or to go to gold, whatever cash is to you. But having said that, when they do work, whether it's 40 years ago or 20 years ago, they go up to the intersecting level of the cross. So for example, if I'm looking at the ES futures, that level where the 50 crossed below the 200, which for those of you who don't know, that's what a death cross is 59.15. That's in the S&P futures. Now we're right there. We're 59.09 right now or so and change in the futures. So if it is going to extend, you make a really good call that now is the time. Now, Jimmy, we have a newsletter. I don't know if you heard that in the beginning, Adam. Actually, I don't think we said it on here yet. Jimmy and I have a newsletter with our business partner, Mike Arnold, who's one of the best technicians you will ever meet. Insane, actually annoying. Sometimes you want to do stuff and Mike says you can't do it right now. The chart isn't giving you the go ahead, right? It's actually annoying and how good he is. We have a newsletter and we sort of line that out for our people. And we said, look, this is exactly the example of what I'm talking about. If we get a break above this sort of intersecting point, a close above it, maybe even a day or two of strength, and then we get a push lower and that level holds. I mean, as a short-term trader, right? As an active trader, I'm in. As an investor, I've been in.
Right.
Right. I just don't see any reason that a 20% move lower, even if you look at it, and I have a question in here. Even if you look at it when the S&P, again, I'll go to the futures for lack of having the SPY up. When the SP was down 20%, it was at the level of November 2023. Like, did you just start investing last year and you're completely wiped out after that? And by the way, are you 70 and you just started investing last year and you're completely wiped out? For people you talk to, do they understand that any more than they did when you first started your career or no?
No, they don't. No, I think that, and that's actually the beauty of technical analysis. I often hear people say, well, don't you worry about, all the things that you're looking at. Eventually everybody figures it out and it doesn't work anymore. And the answer is no, because humans will always be humans and behavioral psychology will never change. It's there. I always say the worst thing about working with clients and managing their money and doing their financial planning is that is they suffer from recency bias. And the best thing about working with clients and managing money is they suffer from recency bias. I mean, it's the same. So, no, I don't think anything has changed in my 24 years of doing this. If anything's changed, it's me. And it's just, getting better about being more patient and, the whole Mark Twain quote that, we've been here before, right? I mean, it's not the same, but it's similar, it rhymes.
Hold it. So the Mark Twain quote is the one about what you don't know, but you for sure.
No, it's history doesn't repeat itself, but it rhymes.
Oh, that's the one. Yeah, I like that one.
Repeat itself, but it rhymes. Yeah.
No, there is another one we use all the time, Jimmy. What is that one? Because I don't ever remember that one.
Mike Tyson one. Everybody's got a plan until they
get punched in the face.
Yeah, no, I'm talking about the Mark Twain one is something to the effect of it's not what you know that hurts you, it's what you know for certain that ain't true, or
right.
Something
like ain't that. So right, exactly. Yeah. Mm-hmm.
Yeah.
Which, by the way, a lot of people are that way too. And I'm one of them too. We talked about emotions before. And for years, I've been struggling with emotions as a trader. And when I have a bad day, it's because I didn't win against my emotions. Let's talk about, Bobby and I have been accused of being gold bugs over the last, call it 2.5, 3 years.
Okay.
Which, by the way, I'll take that now because gold has been one of the absolute stellar performer. So when you are talking to your people, do you have a special section that I like to call, and you might call it something different, like the hedge against stewardship of our fiat currency, which in my mind is gold, silver, real estate, Bitcoin, platinum. Do you focus on those things within your models?
Yeah, I mean, they're more of an ancillary position, obviously. It's not going to be. I'm one of the few, I think, in the wealth management and financial advisory world who actually believes that digital assets are another asset class. Like, I don't think Bitcoin and Ethereum are going anywhere. Obviously, people can argue there's nothing behind them. There's no asset behind them, but that's also what makes them, in my opinion, such great technical tools, is because they're completely traded based on emotion and biases, right? So that's where technical analysis really shines, is when every click to buy or sell and the chart that ensues is a result of human decisions and, the news, it's so, but no, I mean, we've owned gold. I don't own it right now. We owned a silver as well. I don't own it right now. I'm kind of neutral, I guess, on where it's going right now. It's in an uptrend.
Okay.
There's no doubt about that.
No doubt about it. So today was some interesting technical trade, and I'm going to, Bob, a lot of people watching here, a lot of people have been long gold, probably a lot of people have been long gold because we've been screaming about it for 3 years. Today, I thought was an interesting technical day. Did it break? Did it trigger that double top? And does this portend two more downsides? So can you describe what happened?
Yeah. So the double top trigger. Okay. For those of you that don't know, and we got this question on our newsletter, actually, somebody said, what's a trade trigger? Okay. You have a trade setup. And again, just for your information, Adam, like my average hold time is about 26 days on an active investment.
You swing trader.
Yeah. So if you got to close today in the gold futures contract, or any day in the next couple of days, below 3209.40, that was a trigger. In other words, the double top was now an available trade. It was a high probability trade, but there's generally two measured move targets for a double top. And the first one is a 75% extension of the left-hand high to that level that I just told you it had to break, which we call the base. Right. All right. And that level in gold is about 29.84.
Which lines up with the 200-day, right?
What's that?
Lines up with the 200-day right there too, I think. So
no, it doesn't. The second target would line up with the 200-day, but the second target is out of the move that it's reversing. It's probably better if I show this on a chart. I'm just going to put this up on the screen real quick. Take up a little bit of time.
I was just going to say, it's seeing this and understanding it and including volume and things like that. It's a whole lot easier.
It's just easier if I put up the chart. Luis, can you throw this chart up real quick as soon as I get it loaded in there? You guys tell me when you can see it.
I got it.
Yeah.
All right. So I measure the left-hand high to the low and I extend it 175 basis points. Now, the key to a double top, and Adam, you know this, I'm sure, is it's a reversal pattern. And you're looking at the move that is being reversed as this move right here, not this entire move, because you got a cycle high here. So you have to mark it from there to there. So when you measure out the measured moves, the 175 or the 75% extension is inside the move that's being reversed. The 200 or the 100% extension is out of it. So this is not a target right now. To get to this, what is that? 2908.90 is much lower probability based on about 25 years of data. This 175 is a higher probability. Now, the issue
what's the 175 level again?
It's 2984, but we're not closing below the 50. So when you've got sort of a hiccup like that, it's kind of like having a running back broke through the line, got past the linebackers, but there's a really good safety back there, right? You still have the odds that he's going to beat one guy, but he's a Pro Bowl safety. And you're a Cleveland Browns fan. I know you've seen that happen before.
Here we go.
So, that's the kind of thing we're looking at in gold. Now, this to me, longer term, Jimmy, does not mean that gold's not a buy at those levels. For me, it get down to those levels.
Right.
I like gold, and Adam, this goes to a question for you. I like gold now as the sort of, if I go to cash, I go to gold. I don't go to treasuries anymore. I just don't know what's going on in the treasury quadrant. I just don't. I mean, we've had this conversation before that people are thinking the Fed may ease. And Jimmy and I both are having this sort of back and forth. It's not an argument because we kind of agree with each other. Are they going to reenact QE before they ease? Are they going to start buying bonds again before they ease? Sort of doing this easing, but not quite giving Trump what he wants. Whether that's political or not, that's for other people to talk about. So from a perspective of let me just give you two things. You have clients calling you, asking you about gold. I know you do. and you have clients calling asking you about Bitcoin, do you steer them in either direction?
Well, I mean, maybe things are a little bit different here because, we have 18 portfolio models, and, our clients who work with us, that they own what's in those models, right? So I don't think it's a matter of steering necessarily, but I mean, if you're asking my opinion,
Yeah.
like I said, we don't own either right now. I mean, I'm looking at gold right now on a chart, and that double top, like the support would be the bottom of the gap, right?
Right.
And the thing is to keep in mind, though, for people who are new to this, is that's the minimum, right?
Mhm.
Sure.
So
Once it starts in a direction. Yeah. Right.
yeah,
So
I
yeah,
mean,
I get
that
what
would
you're
be
saying.
the minimum. So it couldn't get worse, obviously. However, if you slice this in a different direction, like there was a momentum divergence. If you look at RSI,
Mhm.
there was a momentum divergence on that double top, which obviously, doesn't mean anything's going to happen. It's just evidence, right?
Mhm.
But if you slice this another way and you say, okay, well, it's coming right down to the 50-day moving average, which is also happens to be right around those April 1st highs.
Yeah.
There's a lot of polarity there, and I think there could be potential support. So,
Yeah.
I know it's possible, like Bobby, you were saying, that this could be a potential buying opportunity here. But I think that the risk management is pretty. I mean, I think it's pretty clear. If you enter right around here, your risk is a couple dollars,
Right.
right? If you use either the 50 or if you use those April 1st highs as your line in the sand. Now, for hold on, I'm typing in the chat instead of my chart. If I'm looking at Bitcoin,
Bobby, can we get a Bitcoin chart up too, like a 6-month daily? Because I love a pattern that's
Yeah.
developing, and then
I
Adam
can
can
put,
talk
I
to
can
it.
put a Bitcoin up.
Yeah.
You want the
Bitcoin to
future?
me, I mean, I think what I don't know, Bitcoin is clearly in a long-term uptrend. Bounced right off the 40-week and the 200-day moving average, right back in April. Obviously was in a short-term downtrend before that, but now you're contending with those highs again. And as the saying goes, that the more frequent, the more times it starts hitting that line of resistance and ceiling above our head, the higher the probability of breaking it. The question is, how long is it going to take to break it, right?
Right.
So, if I'm not long Bitcoin, but I like buying investments that are in uptrends, which I think people should, then I think I'd be looking for an entry point in one of two places. Either A, I'm entering on a pullback to the 50, or I'm waiting for a break above those highs in December and January. And then that's my line in the sand for risk management.
So, Bobby, I think you know how I'm looking at trading this, because
Yep.
this move, higher, was obviously dramatic and stark. And these last 4 or 5 bars of the indecision is just that. If I get a trade above the wick of that green bar from yesterday, that to me, because does that take out the candle from the red candle body too
No.
from 2 ago? Okay, so let's say taking out that red body candle from 3 bars ago, the one that doesn't have a wick above there. We trade above that. I think we make a quick run to those highs, and I think they fall apart. I think Bitcoin has been waiting to make new highs and run to new highs. The only thing it had to contend with was the correlation with the NASDAQ, and NASDAQ was getting pummeled last month, or in April, I guess that was last month. But anyway, so now I think that we run right through those highs. Bobby, what's your analysis of that chart?
I like to see pullbacks on these kind of charts. I just always do. So obviously I've got the pen here. So if it's me, I really want to see, I'm going to pull a little trend line here that doesn't really exist. Okay. I want to see something like this happen. Okay. I want to see something move into here. I'll put another horizontal line right about here. Now, by the way, I own this asset, right? I don't know how much longer I'll own it at these highs unless we get follow through. This is the old highs right here where this red line is. This is where I'd like to see it pull back to. And this can move higher as this sort of, Adam, this is what we call the rotation zone, where basically this is the 8 and the 21 exponential moving averages. And oftentimes after the first cross, I don't give a shit about the cross, right? I like seeing rotations into this and seeing them hold. So for example, this move right here, I didn't do this, just so everybody knows. I'm not looking at an old pattern and saying I traded it when I didn't. I didn't buy that. But I draw a little best fit trend line, and then when I get a close above it, I like to follow it out at that point. I'd like to see that develop here. If we just get a move like this, I personally don't have any indication of how far it might run. I don't know, right? I guess the run up to this highs is a good one. Where I really like the way that I look at it, and I learned a lot of this from Mike Arnold, is that I can actually then take like a retracement extension, which I use GAN, I don't use Fibonacci, and do something like this, where I go down, up, down, and I can measure out measured move targets above the high, right? So that's just sort of how I look at it from an active investor perspective. I'm a little more curious as to how many of your models include something like Bitcoin, if anything.
The Bitcoin is only going to be included in the aggressive and moderate models. I'm not going to touch something like that in a balanced or conservative model. It's kind of like, this is something I guess I've never really shared with maybe more than a handful of people, but our moderate and growth models use the NASDAQ as the inventory for individual stocks, for instance. The balanced and conservative models use the Dow. And the reason for that is purely behavioral. It's when this is stereotyping, I realize, but it's true. It's true. When people who are in balanced and conservative models, especially conservative models, they want to know what they own. And when they see a trade come through on their confirm, or they look at their statement online, they don't want to see some random stock they've never heard of before, because immediately they think high growth, high tech, risky. What are you doing? So, and on contrary to popular belief, you can use ranking systems and relative strength to put together great portfolios over the long term, using a smaller inventory like that of big cap names. You know what I mean? But yes, Bitcoin, we've owned it this year. We own gold this year. We own silver this year at one point. And all of those would exist primarily. Well, actually, gold I would buy in all the models. Conservative investors don't mind gold.
Yeah. Right.
So when you start buying the Swedish krona, people start freaking out. That's like jalapenos on food.
So you want to hear a quick something funny too? And as soon as I tell it, Luis, you can put the banner up. I was going away on a long vacation. Twice this winter went away on a long vacation. So I buried. This is because it's not buried there anymore, people. Anyone who wants to steal it, now it's in a safe. But I buried, one of the reasons I was all sweaty coming to the camera today, I buried my gold position in the garden. And I actually grew grass over it over the last month and everything. And all of a sudden, there's only one other person who knew it was there, and she wasn't talking. It wasn't my wife. And all of a sudden, I see my wife with the rototiller heading to the garden today. Like, I just ran home from work and I got to grab something. And things are a little bit rocky between us. We've been traveling a lot together. I mean, we're fine, just how wives fighting, but I didn't want to admit to her that I had buried the gold in the garden. So I was trying to sneak back there with the shovel, sweating my ass off. I was looking at my watch because I got a podcast to go. But now funny. The gold is in a safe, a fireproof safe that is bolted to the floor. And I have guns and guard dogs, but the gold is not in the garden anymore. Anyway, Luis, put the banner up, will you? So for you guys watching, and again, we so appreciate the support you've given us on this show and on our other show. Tradier is offering 3 months free of Tradier Pro. If you trade options at all or are thinking about trading options, this is the path for that. We've talked to options experts, options beginners, and the one thing they share in common is that they've used this model, they love this model, and you guys can get it free for 3 months. And by the way, it is a favor to us because it's a good metric by how people watch the show and how people trust us. So please scan the code. Try Tradier's Options Pro for 3 months. Thank you, guys.
Adam, you grew up in Columbus, you said?
I grew up in Cleveland.
Oh, in Cleveland. You live in Columbus now. My cousins own restaurants there. I just remember that. North Market. North Market.
No way.
Yeah, my cousin John and Rick Ziliak, they started with Pastaria in North Market, and then Serafina's Pizza Deli after that, and then Pasta, I think it was called Pasta Secundo was the other one. Those are my cousin. And then Z Cucina di Spirito.
Rick.
Yeah, Rick. He's my cousin.
You're related to Rick?
Yeah, he's my cousin.
No way.
Yeah.
Great restaurant. Yeah, it's 2.5 miles from my house.
Yeah, his brother Don used to come to my father's Italian bakery to pick up supplies for the restaurant when they couldn't find anything good that they thought was good. They come to my dad's Italian bakery, buy bread, buy pastries, and then drive back to Columbus and use it for the week. It was really, really funny, man. It's funny. I talk to people from Columbus, like, my cousins, and then everybody sort of like Chicago, right? People say they're from Chicago, And then you go, where? Well, Lake Zurich. Okay, that's not really Chicago. It's Chicago. It's the suburbs of Chicago. People will be like, I'm from Columbus. Where? Well, I actually live. Okay, fine.
Yeah.
You're not going to meet my cousins. You're not going to go to the restaurants. I mean, I haven't talked to them in forever. But
yeah, I'll see if I'll tell Rick that I met you.
Yeah, tell Rick. And it's funny because Rick was a drummer for years. He was a phenomenal drummer. When we were little kids, we used to get together and he'd be like grabbing pens and stuff, and he was just drumming all over the place. He was a phenomenal drummer.
Got some ammunition now. Yeah, thanks for that.
Yeah, there you go. Ask him if he still plays the drums.
That's awesome. That's awesome. And Adam, by the way, I live in Palatine, which is essentially 15 miles outside the city. That's where O'Hare reaches out here. Which, by the way, when you're out of town and someone says, where are you from? If you say Illinois, it means you're not in the Chicago metro area. If you're in the Chicago metro area, you say Chicago. You agree with that, Bobby, right?
I agree.
Yeah, and because these towns wouldn't exist without the hub of Chicago.
Sure.
And by the way, in 10 years, the Northwest suburbs are going to be the hub of Chicago when the Bears move out here and those idiots destroy their city. All they got is the lakefront right now going. But anyway.
Yeah, you can't live in Chicago right now. I mean, that's my opinion. I do have friends that still live there. They get really mad when I say that, but I live in Southwest Florida now. We left because the gunshots were getting closer. Yeah. My wife and I lived in the city. And we came down and spent a month in Southwest Florida right around COVID because Florida was open, Chicago was closed. And when we came back, my wife took the dogs for a walk in the park across the street from our house and came back with a 9mm shell casing. And she's like, can we go? I'm like, yeah, let me just straighten some things out here. I got some comments I want to go through because people are saying hi and stuff like that. First one is our boy Remo from Its Stock Charts.
Love Remo.
He says hello. I think the comments, by the way, were delayed. Normally we have a lot of activity going on in the comments, just nothing was coming through. And I thought it was me not wearing a black shirt. I really thought
it could be. That's what I said. Yeah.
And we've got again, Jimmy, it's Yosemite Sam. There's gold in them there hills. That's Remo. Remo's a grease ball like us too. Then Timmy's making fun of you too. Jimmy, is this 1932 FDR isn't coming to take your gold?
How do you know, Tim? How do you know he's not coming to take it? Not FDR specifically. They may come to take my gold. Actually, you know what's so funny why I buried it in the yard? Because it was because, like, let's say the house burns down. I don't have a fireproof safe. And then Bobby told me a story last week about, guy's house burned down. The only thing that survived was the gold because it's essentially indestructible. Yeah. And then I felt stupid for burying it in the garden. But anyway.
Yeah. And then Sterling says, hey, Bob, Jim, and Adam. Sterling is a great guy, Adam. He's a great guy. Like, he'll probably follow you on Twitter after this.
And he helps us out a lot. He's no dummy either.
Yeah, you'll hear from him again. Tracy Shoecard on Twitter, who is Shy Girl, @Shy Girl. Huge following. Really, really smart girl. So this convo on Chicago is.
I've seen her before on Twitter.
Yeah.
And then Edward McKernan, that's the Ed who was on our show, Joe.
Yeah, we love Edward. We love Edward. Yeah.
Yeah, he was on one of our shows. So he's a big tech guy. Worked in tech in China. Huge wealth of knowledge. Was doing Capone jokes about your gold safe, Jimmy.
I will say, if you've ever met a rabid, crazy dog and you're not, you come break into my house is all I'm saying. Anyway, let's go back to markets. So we talked about the S&P in general. We talked about tech. We've talked about gold. I'd like to get to energy. And Adam, I'm hoping you have some thoughts on the energy sector. We had talked about, in the trade year rundown, the relationship with Saudi Arabia. It seems to be getting better. Saudi Arabia definitely is keeping the supply up. Why they're doing it is anybody's guess. I like to think is because they respect and like Trump, and maybe they're a little scared of him. Where are you in energy, and are your models long it?
No, we're not long. One of the things I'm realizing, by the way, as we're talking, and this is just good for everybody to know. I think you two already know this just from the first 10 minutes, but my time frame's longer. You're talking. Yeah. You're talking swing trading, 3-4 weeks, call it 21, 26 days. I'm more 6 to 9 months. I'm intermediate term. Yeah. So no energy right now. Yeah.
By the way, the biggest part of my portfolio is I trade with 6 to 9 month time horizons, and I use technical analysis for that as well too. So, I trade quite a bit. My sweet spot is 2 weeks for my trading. But as far as my investments, I manage them all like 9-month trades. I take into account tax repercussions too, obviously. So then what other sector might you be interested in that we're not talking about?
Pick a portfolio. Pick, is it going to be the aggressive portfolio? Obviously, it's not the conservative if it's the down.
I'm gonna pick the aggressive portfolio because I mean I don't think anybody's going to be interested in talking about a conservative portfolio. But I mean,
Yeah.
and from a sector standpoint, we're long industrials, tech, still, discretionaries, financials is probably one of the newest positions we've added on earlier this year. Added financials, and then when we look at equities. Individual stocks, we own Netflix. We've had Netflix for a long time, but Intuitive Surgical, Costco, Cintas, Palantir, Gilead Sciences, Take-Two, MicroStrategy, CrowdStrike. So, and that's in the aggressive and moderate models.
That's interesting. Bobby, you have any thoughts on that?
I do. It's funny because I did a sector back test a while back, and then I backed it up by stealing one from Invictus Research. Mike Singleton's a friend of ours, by the way. He comes on the show and he knows that I look at his stuff and I quote this stuff on the show. But the energy sector, according to him, he did a multiple year back test that energy only is like the best performer in reflationary scenarios. So huge growth, huge inflation, right? Or an upward swing on both. And I think we could all agree that that's not what we have right now. Okay. Even if you're somebody that thinks that, the economy is starting to, I mentioned the slowness in the economy, I think is likely to continue, at least in the short term. I don't think you announce a deal with Saudi Arabia and Qatar, and all of a sudden everyone's like, whoa, the money's flowing again. It just doesn't work that way. There's a lag time. So I think energy is probably a poor place to be invested in, and obviously your model showed that as well.
Yeah, on inflation, because I wasn't on the air when you were talking about inflation. I agree with you two completely. And then I don't know if you ever follow Tom Lee and Fundstrat. Sure. They've done some good work on separating out the University of Michigan inflation by political party, and the 1 year expectations. And again, this is not a political show, and I'm not talking politics. This is
this is important information, and it's not political. It just tells you what the data is. Let's hear it.
The 1 year inflation expectation for Republicans is 0.4%. Okay. The 1 year inflation expectation for Democrats, 8%.
8%.
8.
That's crazy.
So when you look at the University of Michigan expectation at 6.5%, it's wildly skewed by politics.
Wow, that is freaking mind-blowing to me. Yeah, and again,
I'm so glad we got that on here.
That is me too. That's one of the major takeaways. But by the way, what that speaks to is how emotion drives this shit. And if you look at that and you can't realize that you're being somewhat of an idiot, then nothing is going to let you know that and reveal that thing. Because if you think 8% inflation because of a 10% tariff, that is just completely asinine. Anyway,
isn't that one of the main reasons you just tell people, like, look at this stuff, pick models with us and we'll let you know if we need to tell you anything, and just kind of let it run. Because if somebody's like that, I mean, I could see you're not a political guy front facing, right? And you just say, look, I'm a Democrat and I want out of everything. And you got to be like, okay, hang on a second, just calm down. I'm a Republican. I want to double up on all the risky stuff. I want to double up on calm down. You just kind of feel, is that a huge part of your job, or people you just say, look,
I would say it's a huge part, because thankfully we've done a really well. Look at what you two talk about. This is the first, we talked, Bobby, you and I, on the phone, and I think we got along pretty quickly. Absolutely. We all agree on how to work the markets, and that you let the market tell you what to do. Correct. And we look at the market purely from the standpoint of supply and demand. If there is more buying enthusiasm than selling enthusiasm, price must rise. And if there's more selling enthusiasm than buying enthusiasm, price must fall. That's it. That's the market. But unfortunately, 20 years ago, you couldn't even text message somebody. Mm-hmm. Now, you get the news. Some people watching their favorite news station. Some people it's on the radio on the way home from work. And then the worst of them all is getting it on Facebook or something, which, it's all algorithms and figuring out what it is you like and what fires you up. And what's the thing? I just heard this quote the other day. If you're not paying for social media, you are the product.
Yep.
Mm-hmm. So
Yeah.
I mean, we have a few people we've had to talk to, but here's where I think the irony is, because but at the beginning of the drop, right, when the market was down 10% initially, before we knew it was going to drop 19.9 or whatever it was,
Yep.
I did a video and I put out, all this analysis, and it was crazy to me. It was like, this is the same drop that happened last spring. Velocity is a little different. The only difference is what's on the news and who's in Washington. We didn't freak out last time, but you look at sentiment, you look at like put call ratios, you look at fear greed indices, and you're seeing numbers that are worse than COVID. At the bottom of this tariff crash, or Liberation Day, or as Gina Martin Adams called it, Strangulation Day. At the bottom of that, the sentiment indicators were worse than a global pandemic. That makes no sense, right? And that just goes to prove why it is such a news-driven, emotional event, and probably why we're not going to see a retest.
Yeah, Jimmy, we got something from Tim that's probably to both of you. Luis, can you put up Tim's question, please? Any thoughts on uranium? Seems like U308 bottomed in March. Now, I haven't looked at it. I don't know if you guys have. I haven't looked at it in a while.
No. I own a uranium stock that was given to me by Tracy. So let me look at that real quick and do the chart breakdown. Adam, you can if you have any thoughts on it.
I mean, I look at this, it's choppy. Again, I'm looking at on my time frame again, just to be clear, is 6 to 9 months. And this is a messy chart. I mean, your short-term trade for the time frame that we're talking about on this show, you got a flat 21-day moving average. It's trading above it. Volume's kind of Momentum's good though. I mean, we've got a bullish momentum regime now. The question is, for me, because like when in doubt, scan out, right? For me, I'm looking at this thing and I'm going back further in time and saying, okay, is this something that's tradable? And even if you're short term, if you're looking like an RSI 5, which I don't have pulled up here, let me pull it up real fast. There we go. Yeah, it's pretty long in the tooth. Bobby, I'm not sure if you're like me. I don't trade breakouts. I'm just not good at it. I'm a pullback guy. I'm not looking for a sale.
Yeah, I need a pullback.
Yeah. So
Bobby, can you see if Luis will put up UEC? That's your Uranium Energy Corp. It's one of the names. And again, UEC. People, I will remind you,
uranium. It looks like
I look at charts all the time. I don't recommend stocks. This is a stock that I own because I like the uranium story long term. And Bobby, you're going to look at it. You know exactly where I want to buy this again.
Yeah. I could already see it. I just put it up.
See it, right? So this is the one thing that Bobby and I differ in is that I do like to buy breakouts, and Bobby does, generally speaking, like to buy pullbacks more. But I think you take the high out of that bar from yesterday that rejected that high, and we can settle above that. I think it's off to the races, back up to $8 relatively easily. I think, again, I'm not recommending anything. This is a stock I own that I may be adding to if it can settle above that. What is it, like $5.95?
Which one, like this high here?
Yeah, like if it settle above those highs.
Yeah, it's about $5.99. But I mean, you got a flat 200-day moving average right in the way.
I see that.
And if you look over here, there's also
you got two bearish engulfing candles as well. I'm not sure if you care about that.
Doesn't it? Yeah, I do care about them, but I figure a settlement above that, it's got to be a daily settlement, negates those two. But maybe again, maybe I'm not. Maybe it's wrong.
No, you're right. You're right.
Yeah. So right here is what we call significant levels. And it's kind of, I'm going to go into this concept. It's going to take me a minute, but significant levels are levels where you see reactions, and they're a range of prices. Okay. They're not just, it's going to be 668. That's not what it is, right? It's a price range where you've seen multiple reactions to. So if you kind of look at where I have this red line, here's a little V-shaped down move, right? Even though when we got above it here, it was emotional candles with decent volume versus the days around it that caused us to break out above it. Then you got a test of the area and a huge reversal. Got close, reversed. Got here, right on the money, and reversed. Got over here. When we broke down, it was an emotional candle. By emotional, I mean it's a wider than normal range with some volume versus recent days, right? Here's the volume right there. There's the recent days. And then you got an extended move down there. There's a lot of trouble getting up through this area. It's not that you wouldn't have a nice trade on, because you'd break from here, you'd get this money, and then you might see some struggles. Now, this is part of the reason where I don't buy breakouts of anything that not a knock on you, Jimmy. You make money when you trade, but I don't buy a breakout of anything that I don't see as a significant level, right? As something that matters, because I do hold things longer. And by the way, Adam, it's not because I want to be a swing trader. I have a target and I have a stop. And a long time ago, I left the floor a long time before Jimmy did. I left in 2004. Jimmy is often still there. And for me, I had to learn a way to shrink my position size and expand my reach, expand my stops and expand my targets. Because Jimmy will tell you, Adam, I don't know if you ever spent any time on the floors when they were a thing. We used to be able to, Jimmy, maybe you can still do it. You hear a sound and you know if it's going up or down without even looking, because the sounds are different.
Right.
Right. You see a certain guy acting a certain way and you know that something's happening. When I left the trading floor, that was gone. I didn't have that anymore. So I wasn't able to do that. So I shrunk my position size down to what we would consider minuscule for a trading floor trade. And I expanded stuff out. I'm like, okay, now, and by the way, I'm not saying this is a trade, nor am I recommending it. Now I would buy, this uranium chart at 536, and my stop would be down below 362. Where if this were a trading floor, I'd buy it at 536 and get out at 530. You know what I mean? And just shrink the position size down. So it's a lot different now in terms of that perspective.
Adam, just to add something,
one step further to that than me, right?
Here's what I believe, Adam, about trading floors, and I still do. Like Bobby and I could be 30 feet from each other. And look, you guys, you're about to think I'm a nut job. Like, I think if all of a sudden Bobby starts, gets a call, gets a message, and all of a sudden something has made him tense, has made the hairs on the back of his neck stand up. I swear to you, all your back hairs. And I swear to you, you can feel it 30 yards away. Like we all would know when something was up and we wouldn't even know why. And what I'm saying is he didn't say anything. He didn't yell anything. It just was like, shit, something's going on. I swear to God that happens. And again, physics backs that up a little bit with the whole quantum entanglement theory. Once you have become part of somebody, oftentimes you can feel stimulus that are happening on them, even when they're out of sight and out of mind. So I believe it happens. But anyway, maybe I'm crazy. What do you got, Bobby?
Really, I just want to point out that I saw both your comments, and your last one about Coco is really, really funny. When I used to join Mike Arnold's live streams, there was this guy named Coco, and all he did was say, stocks go up, stocks go up. And we're like, no, they don't always go up. And then a down day would come. What about today, Coco? Well, no, it's going to go up tomorrow. They always go up. They always go up. So Sterling kind of runs the moderation of Mike Arnold's chat rooms. Anyway, Adam, I want to ask you this, and you could say this, you don't feel like talking about it here, but I think you'd be surprised at who our audience is. You have other businesses.
Oh,
one specific that interested me that we're going to talk about on the podcast in a few weeks. Do you want to talk about that here or no?
Which one? Which company?
The consultancy for
advisors, or
for advisors.
Yeah, sure. We can talk about that if you want to.
Yeah, I want to talk about that because I think that's interesting. And we've got over 1,100 people watching live right now, and there's advisors in there. So,
sure. You just want me to verbal comment on it?
Tell us what it is.
Riff a little, like my cousin Ricky used to do on the drums.
Nice. There we go. No, it's well, I'll just. It wasn't intentional. It wasn't supposed to be something I started. I was helping a friend in New York who I've known for 14 years. He's 60 years old, financial advisor for 30 something years. And he called me up in summer of 23 and he says, it's one of those typical phone calls. You call somebody in the business, you want to see how things are going, just catching up, twice a year, whatever. And he's like, hey, how are things going? I'm like, oh man, it's like 7:30 at night. I said, man, things are going awesome. I'm still working, having another record year. And he says, man, well, what are you doing? And I said, well, there's no one thing I'm doing. There's lots of things we're doing. And he gets frustrated with me. And I never had the guy until 14 years at the time. I never had him mad at me before, but he was clearly and audibly frustrated on the phone. And he says, well, fine. What are the top three things? Just tell me something, And I'm like, his name's Leo. And I'm like, Leo, I can't. There's no three things. I mean, if I told you what the three things were and you went and did them, you wouldn't see the results I've been seeing because it's a lot more than that. It's like an orchestra, Chicago Symphony Orchestra. If you play three instruments, you're not going to have a very great song, right? It takes more than that. but so he says, okay. And he just kind of sighs in the phone at me. And so I'm like, what was that? And he goes, I don't know. He's like, I've just been kind of down in the dumps. We haven't been growing. I'm like, well, how long has it been since you've grown? He goes, man, I don't know, probably a decade. I mean, we hired my son-in-law. We're not bringing clients in the door. So he doesn't have really anything to do. And honestly, I just kind of burnt out, just not really interested in the industry anymore. And he's like, but I can't sell because my company isn't worth enough yet to get the number that I need to, ride off into the sunset. And it just kind of got quiet, and I didn't really know what to say other than to apologize for saying I was having a record year, right? And he's like, no, it's fine. And then there's this pause, and he says, years ago, you said that if I ever wanted your help, you'd be willing to open up your business and teach me everything you do from the second you show up in the morning to the second you punch out every day. He's like, would you still be willing to do that for me? Because I think I'm ready at this point. And I'm thinking my wife and kids at 7:30 at night, my wife and kids are in the other room because I'm in my home office. They're waiting for me to come in and watch a movie. I'm already working 50 hours a week. So I'm going to be crucified, if I say yes, but I can't say no. So I said yes. And to make a long story short, 27 hours of Zoom calls and 14 weeks later, I built out basically the diet version of my business for him in Dropbox. And in that 14-week period, he brought in $4 million in assets. And last year he grew at 41%. And after doing that, it was so much fun, just fulfilling, that I just thought, and my wife's been telling me for 15 years, I need to help other advisors and teach them how to do what I do and how I grow my business. So I just decided it was time, as opposed to waiting until retirement, which was always the plan. Let's wait till I quit, retire and sell my advisory practice. And then I'll do that as like my retirement job. I thought I already built it. I might as well start it now. So it's called Adrenaline Advisor Consulting. It's the website's adrenalineadvisor.com. We're launching it this summer. So technically it's not open to the public yet. We've got 15 founding members that we've taken through a one and only cohort. The way it works is there's 46 courses inside the program, along with a community. And there's chat rooms in the community where people can ask questions and anybody can answer. I can answer. So just kind of almost like a think tank, so to speak, of financial advisors that are growth minded. I do office hours twice a month for an hour and just answer questions on wherever anybody is in the program in the coursework. And then we do a group intro calls is what we're going to start doing twice a month, because I don't have the time to do individual intro calls for people who have questions, but that's what it is. So thank you for allowing me to share it. I didn't know we were going to talk about that, but it's a passion project.
Yeah, no, we're going to have a whole hour on that, and I can't wait to do that in a couple of weeks. That's going to be on our regular podcast that we pre-record. But I do want to get one more comment up here, as we're running out of time. We don't want to keep you any longer than we promised we'd keep you. Worldwide Wealth says, is the CAMP dividend discount model still a useful tool? I think he means the CAPM, which, Jimmy, capital asset pricing model. Jimmy's lawyers won't allow him to admit he knew what that was.
I can't, right? Unless it's futures related, right?
So this is obviously a question for you, Adam, because I don't use it.
I don't use it. No, I mean, there's some economists that use it. I know that. I don't mean to call out Husband, but I know that's something he talks a lot about. But I don't think I don't think it's actionable personally. I think there's a whole lot of other better things. Two things. I think there's a whole lot of other better tools you could use, first of all, and second of all, the biggest advice, and I assume you two would agree with me. I don't mean to assume so much here, but I think the biggest piece of advice I could give anybody who wants to learn how to trade and invest on their own, it would be, don't try to pick 8 tools, 12 indicators. I mean, find one momentum indicator, a couple price indicators, and that's it. And I was talking about Keller earlier, Dave Keller and I we were having this conversation about portfolio management and models. And, when I built my strategies back in the late 2000s, it took me easily 2,000 hours of testing and building systems and retesting and walking it forward with, an empty data. And at the end of the day, it doesn't matter if your portfolio model has 3 indicators and it's based on asset flows, or if it's based on moving averages, or if it's based on momentum or a ranking system. They all kind of work. Like when you look at the drawdown analysis, like the drawdowns during big crashes, they're similar. They're not the same, but they're pretty similar. So, and what I love about what we've been talking about today is that, you guys, Bobby, you're talking about a 21 to 26 day time frame. I'm talking about 6 to 9. It's fractal. All this stuff works on all time frames. You just have to pick a time frame and stick to it.
Amen. That's a good way to close it out. You done, Bobby?
Yeah, Timmy's asking about Leo the 14th. I'm anti Leo the 14th because it turns out he's a Sox fan.
Well, he's a South Sider, which I guess is almost
Yeah.
like being from Chicago, but it's not. Yeah.
I just don't think, I don't know. Luis, are you Catholic? If you're Catholic, put that comment up. If you're not, don't worry about it. I don't know. I mean, how holy can he be being a Sox fan?
he's a Sox fan.
There's a meme going around.
Yeah, I guess
there's a meme going around that says that it took him only 2 days to pick a pope, but it took him 3 days to draft Shadur Sanders.
Oh, okay, I got you. Okay.
Love that.
Nice. Anyway, yeah, I don't know. He seems like a good guy. I figured by now I'd know some people who knew him or something, but I haven't heard anyone come. Oh, one guy said, "Oh, I went to the same high school."
I do have a story about that. So he was a substitute physics and math teacher, but he was on staff at St. Rita High School on the south side of Chicago, right? Yeah. When I played my last year of high school football, I was fantastic. We played Gordon Tech in the playoffs. Adam, this is going to mean nothing to you. We played Gordon Tech in the playoffs, and all the local papers were like, yeah, Morton shouldn't even show up, right? They're terrible. Gordon Tech's a perennial powerhouse. And we beat them 8-7 in overtime. Back in those days, they gave you the ball at the 10 line. The game finished 0-0, and they gave you the football at the 10-yard line. You each had a chance to score. They scored, kicked a field goal. We scored. And our coach starts screaming, "We're going to win or lose right now. We're going to win or lose right now." And we went for a 2-point conversion and we won it. Oddly enough, I was blocking on that play. In the picture in the Sun-Times, you can see my ankle. But that's it. See the guy, our running back named Kenny Wiz. What a name for a running back.
I love it.
He's scoring and my ankle is sticking out of the pile. Anyway, we go into St. Rita the next week. And Pope Leo, former Cardinal Prevost, or however you pronounce that, he was a huge St. Rita booster and a part-time football coach. And it was 35-0 in the first half. Like they just rolled us. Yeah. Absolutely rolled us. So I hate him.
Okay. And that's a long way of saying I hate
that's my view. I can't stand it.
You have any closing words, Adam? Can I play us off?
I think I talked enough.
You talk great. And by the way, find Adam. The best way to find you is on Twitter at
Adam Koch.
And what about like your website? Give all that, because there are people out there with money and people out there are looking for good people to manage it. So what do you got? Where's your website?
Wealth management firm is libertaswealth.com.
Got it.
For advisors, it's adrenalineadvisor.com. And then for owners looking to grow and sell their companies, it's elevateandexit.com.
Okay, so you guys can put that on repeat and go back and get those too. Thank you guys for showing up, watching us, all the support you've given us. It's been humbling that our two shows have done as well as they have. Please support our newsletter, Unfiltered Finance. It's on the Slice app. We take a lot of the topics we talk about on the Trade Air show and discuss them in a little further detail there. So please check that out as well. I'm Jim Iuorio. That's Bob Iaccino. Thank you guys for joining us.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.